Argentum is one of the leading fund investors in Northern Europe, specializing in selecting private equity funds, a large proportion of them in the growing Nordic market. Since its inception, Argentum's invested over €1.5 billion in more than 150 funds and over 800 companies. And it's owned by the Norwegian state. Does that make a difference? I'm Andrew Wilson, and I sat down here in Davos with Argentum's CEO to find out. Okay, Joachim, thanks for joining us. Good to talk to you. First of all, Argentum is a state-owned asset manager. How does that make it different to others?
Well, there is a lot of sovereign wealth funds and state-owned managers out there, but Argentum actually raised capital from private investors, institutional investors, family offices. And I think that sets us apart a bit. We're also very specialized. We only invest in private equity, selecting private equity funds and managers. We do not invest in real estate and equities in general, publicly held equities and fixed income.
Primarily the Nordic market, I understand, although you do spread further into Northern Europe, don't you?
Well, it started in the Nordics, where you can say that's our home turf, actually. And the Nordic market is one of the larger private equity markets in Europe, only second to the UK market, which, of course, again, is only second to the US market in the world. The private equity market of Scandinavia is the same size as Germany, while Germany, of course, has an economy that's 4 times as large as the Scandinavian economies combined. But being an asset manager specializing in private equity, we are not thinking really in terms of geography. We are seeking the best private equity teams there are. And we find strong private equity teams, one of the strongest actually here in Switzerland. We find them in Benelux, not at least in the UK. So we operate in all Northern West Europe.
So why would a fund choose to work with Argentum particularly? What kind of values do you espouse?
Well, firstly, I hope they come to us because we have a strong track record. I think that's an important part of it. But really, I think also it's about the approach we have to the market. We have a broad oversight of the European private equity scene. We have, I think, a strong insight into private equity funds. We have good relationships to nearly every private equity fund in Europe. And we really understand the business. That's what you get when you are very specialized. You really get in deep into the industry. And I think to have a partner that understands the industry is important to many investors. When it comes to values, I think private equity, we're not buying a fraction of a company. When private equity really invests in a company, you buy it all, basically. Buy 100% or at least 50% of the company. The values you bring to the table is quite important then, because those values will shape the company for the future. So we're quite particular about values when we go into private equity funds.
I was going to ask you, so how important is the whole issue of corporate governance and the role that you might play in that?
That's a very interesting question when it comes to private equity, because corporate governance is really where private equity started in the first place. In the last 20 years, approximately half of the publicly held companies in the US have been delisted. And it continues going private and picked up to a large extent by private equity. And this is really about corporate governance, because, a publicly held company, there is, of course, diversification for investors in holding publicly held companies, but also the governance issue, the separation between investors and management, that give a rise to a lot of governance issues, of course. While the family-owned company, which is the opposite, have, of course, very strong governance, but very, very little diversification. Private equity is actually bringing the best of both worlds in together. You get strong governance and diversification through private equity funds.
So does that give us the impression that the whole sector is due for more expansion in that case?
It is. Already private equity constitutes 5% of the American GDP and growing by the hour. And of course, it's very important in the UK economy, which is the leading economy actually in Europe. And I think the potential in Germany and in the rest of Europe is huge, not at least when it comes to Asia and China, where the economy still is in, let's say, more like the infant phase of the development. So I think private equity is very important in developing more advanced economies.
People outside of the financial world think of private equity as being something kind of predatory, something that comes in, strips something down and creates a different value that perhaps the company didn't expect in the first place, giving it a ruthless reputation. Do you think that's fair?
It's not fair, do I really? I think private equity is actually about job growth. The growth rates of private equity held companies is twice that of the other types of companies in the economy. The private equity sector perhaps comprises about 1 or 2% of the Norwegian economy. It's not that large as in the US. But still, 7% of all new jobs in Norway for the last 15 years has been gained in private equity held companies.
Looking at growth areas in the future, healthcare, life sciences, does that chime with you? Does that resonate with you?
Yes, private equity is very focused on those types of investments. Healthcare is a very growing economy, not at least in the UK, but we see it in Germany, in Benelux, and in Scandinavia. And I think people want to spend more and more of their wealth on healthcare. But of course, technology is going to be a very large part of the serving of that segment. And private equity is very adept to handling that. So private equity is investing heavily into healthcare and technology in general at the time.
And a phrase we're becoming more familiar with now, disruptions, disruptive elements in the market. I mean, that also must resonate with you, the idea of things that go against the grain or bring transition or change.
Yes, private equity and the governance model is really about consolidation and restructuring, getting efficiency into a company, into an industry. Disruption can be many things, but it basically boils down to that you serve a market in a different way, with a new approach, so to speak. The music industry is a good example. Before, when we were young, we bought CDs. Now we get music streaming. So you serve a market in a different way, more efficient way, a new way. And private equity is very, very, very strong at doing exactly that.
Final thought then, it's been quite a strong decade so far. What do you think the next 10 years holds for private equity?
I think private equity have a huge potential in front of it, under the threshold for great expansion. Still 5% of the US economy, but of course, look at Germany, a lot of small and mid-cap businesses that need to be restructured, consolidated and growing, even in the post-Brexit UK economy, and not at least in Asia, where there's a huge potential. I think private equity is very important in shaping the future and gaining competitive economies and job growth all around the place.
Joachim, pleasure talking to you. Thanks very much indeed.
Thank you, Oliver.